Good morning, this Tuesday, the 4th of March. I'm Grady Wolf, market analyst with Bell Direct. Wall Street started the new trading week and trading month sharply lower as investors brace for the impact of Trump's tariffs on Mexico and Canada, of which come into effect on Tuesday, US time. The Dow Jones fell 2.1%, the S&P 500 lost 2.3%, and the tech-heavy Nasdaq ended the day down a sharp 3.2%. Investor hopes of a last-minute deal to prevent the tariffs from going ahead were dashed in afternoon trade on Monday, after President Trump reiterated the 25% levies on imports from Mexico and Canada will go ahead from Tuesday US time. Companies that face a direct hit from the tariffs also tumbled yesterday, including Ford and General Motors, so tough times in the US there. Over in Europe on Monday, markets closed higher as defence stocks continue to surge in the region amid new spend in the sector. The STOXX 600 rose 1.1%, Germany's DAX rose 2.6%, the French CAC added 1%, and in the UK the FTSE 100 ended the day up 0.7%. Across the Asia region on Monday, markets mostly rose as investors awaited clarity on Trump's tariff plans on the region. Japan's Nikkei rose 1.7%, Hong Kong's Hang Seng rose 0.44%, Taiwan's TAIEX index fell 1.3%, and China's CSI index closed the day down just 0.04%. Locally on Monday, the ASX started the new trading month and week in the green, with the key index posting a 0.9% rise at the closing bell on Monday, as all sectors ended the day higher, led by energy stocks rising 2.02%. The positive market sentiment came ahead of the wave of tariff implications out of the US commencing this week, which is set to shake up market returns and outlook, while we are also bracing locally for the latest slew of economic data released, with GDP reading out later in the week. The energy rally on Monday was amid investor outlook for the price of oil to rise when tariffs on Mexico and Canada come into effect, as these are two major exporters of crude and also major buyers of crude oil, especially China. In battle, casino operator Star Entertainment Group shares were suspended on Monday following a trading halt after the company failed to lodge accounts to the ASX for reporting season. Medical imaging giant Pro Medicus jumped 3.2% on Monday, with the valuation continuing to soar after the company signed yet another deal to roll out its core imaging tools. Now, the deal is worth $40 million and it's with a US radiology provider, Lucid Health, and that will see Pro Medicus devices and systems rolled out through the Lucid Health network. So another big win for Pro Medicus. Ahead of Tuesday's trading session here in Australia, the SPI futures are anticipating the ASX will open the day down 1.35%. That wasn't unexpected after the turbulence on Wall Street overnight. On the commodities front this morning, oil is trading 2.3% lower at $68.16 a barrel. Gold is up 1.11% at $2,888.53 an ounce, and iron ore is down 0.21% at $106.9 a tonne. The Australian dollar has slightly weakened against the greenback to buy 62.17 US cents, 92.84 Japanese yen, 49.13 British pence, so back under that 50 cents level, and 1 New Zealand dollar and 11 cents. And now let's dive into some trading ideas for your consideration this Tuesday. Bell Potter has maintained a buy rating on Harvey Norman and have raised a 12-month price target on the home goods giant to $6 per share, following the release of the first half results, including some key beats in the Australian franchising division and also in the New Zealand operations. Now, single-digit earnings growth across the most metrics was reported by Harvey Norman, and the analyst increased the 12-month price target due to multiple catalysts in the near to mid-term, such as improving sales trends and the growing AI movement. And Bell Potter has slightly increased the 12-month price target on Bubs Australia to 15.5 cents per share and maintain a hold rating on the infant formula producer with a speculative risk associated, following the release of the company's first half results, including net revenue growth of 24% to $48.5 million, EBITDA of $500,000 compared to a loss in EBITDA of $6.8 million in the prior corresponding period, and outlook for net revenue for the year for FY25 to be $102 million. The analyst sees Bubs continues to make inroads in the US. However, the analyst also remains cognizant that the potential tariff will have impacts on the company, if any. And that is all for this Tuesday morning. Have a wonderful day and happy investing.